we did a release, right?
Some calculation on employment income over time and the rest.
We did overtime and the rest. So, did we solve full question on employment income? Did we go through the format? Okay, I think we
No,
also did,
we didn't.
but we did basic calculation of basic salary, right? How to calculate basic salary, we did that one. Yeah, I remember we did something like that. Okay, so we did bonus calculation, right? I want to know where I got. We did bonus calculations. Then we also, please can you hear me?
Yes, sir.
Okay, so we did all this one. We did the determination of basic salary, where we said I even asked you to calculate some basic salary from this. I hope you remember that we did basic how to calculate the basic salary. Did we do that one? Did we do the basic salary calculation? Cost rep. Cost rep. Let me see.
So your line keeps breaking. I don't know whether it's from my side or from you.
It keeps breaking. I can't hear me. So can you hear me? So if I'm talking, you can't hear me right. Then that's why. But is it okay now?
Yes, sir.
Let's hope if it is going to be stable. If not, I have to go out. I think the network today wants to be rough. But I was asking you that. I remember. Did we go? I think we did the calculation of basic salary last week. How to calculate for basic salary? We did that one, right?
Yes, yes, sir. Yes.
Where we said that the first one, 12-month anniversary salary, then you add the increment to it to help reduce something. Now, today we are going to solve. Before that, let's go through the format. Let me see. Let's go through the format for calculating employment income. Then we can now take the question. Okay. So the format is on your screen. I want to believe that you can all see it.
Yes, sir.
So if you are to calculate employment income, this is the format we are going to use to calculate the employment income. And with this format, first, before you calculate the income tax, you have to first calculate the chargeable income. Because we have realized that It is not all the taxpayers' income that we calculate tax on. Portion of the income, sometimes we don't calculate tax on it. So we have to first determine what we call the chargeable income. So this is the format for you to get the chargeable income upon which the tax can be calculated. So if you get the question, first thing is to calculate your basic salary. Half of basic salary, nobody will give to you in the question direct. You have to work for it. So the question will come in a scale form. Somebody was employed on this date with a salary of this, maybe to 5,000 by 100 to maybe 20,000. That information, you should be able to use it to prepare or calculate your basic salary. So first, you need to get your basic salary. So you will calculate it and put it there. Then, as soon as you get your basic salary, you add all cash allowances in the question to the basic salary. And the cash allowances, this is where you will see something like duty post allowance, meals allowance, entertainment allowance, all allowances. But we remember that when we were talking about garden boy, maid servant, cook, and laundryman, all these people, we said that if their salary, these people, servants in the employee's house, if their salary is given to the employee to go and give it to them in the house, we will add it or we treat it as what? Cash allowances. However, if those people, the servants, if their salary is paid to them directly, then we treat it as other non-cash benefits. I will remember something like that.
Yes, doc.
Good. So when you get to the cash allowances, it is not fixed. You don't know, you can't say that after cash allowances, these are the cash always this fixed. No, because an item can be cash allowance today, but in another question, that same item will be treated as other non-cash benefit. For example, maid servant. The salary of the maid servant was given to the employee to be handed over to him. In that case, once the amount was given to the employee to go and pay the maid servant in the house, that amount will be treated as part of that employee's cash allowances. So when I list cash allowances, you write maid servant. Then the amount you write it. But the same question, if they tell you that the maid servant was paid directly, then it changes the whole thing. That same maid servant has to be treated as other non-cash benefits. So watch how to go by. So first, base salary is very, very, very important. Once you get it correct, then you add all the cash allowances in the question to the basic salary. As soon as you add cash allowances to the basic salary, you get the total, you get is what you call the TC, total cash emolument. Total cash emolument. But I must also say that the cash allowances, there are some items that will come. When we say that we have excess bonus, maybe we are working and say there's excess bonus. We said that once you have excess bonus is 15% of the base salary, you do everything and say there's excess bonus. The portion that is not in excess will be charged at a concession rate of 5%. But the excess bonus will be added to the person's income and tax number. This is where to add it. So when you are listing the cash allowances and there's excess bonus, the excess bonus is also treated as part of the cash allowances. And if there is a provident fund, which is more than 16.5%, the excess percentage on the base salary will also be treated as cash allowance. So you have to always be very, very, very careful, and your brain should be working hard, because if you don't take care, just one thing can change the whole thing. So that is how we are going to calculate the salary income. So you have your base salary plus all cash allowances. That will give you total cash emolument. Once you get a total cash emolument, then you add the car and the rent element. You see, we did something about car and rent element that once the person is giving car, driver, fuel, driver, and there's a condition, there's a percentage of the person's TCE that you have to charge. So that is why you see there. If the person has been given accommodation or fully furnished or share accommodation, that one too, there's a percentage of TCE that the person is going to be charged. So once you get your TCE, then you do the car and the accommodation rent element, you add it to the TCE to get what we call qualifying employment income. Once you get a qualifying employment income, then you add other non-cash benefits. So here, other non-cash benefits, you can have the maid servants, you can have garden boy, security man. If their salary are paid to them directly, they will all come under garden. They will all come under other non-cash benefit. Again, the other non-cash benefit too can be in the form of some items, like he was giving a bag of rice, or you're giving soup, another thing, detergent, and the other thing. All those items, you quantify the amount, their value will be added as the other non-cash benefit, benefit in kind. So that's how we do it. So when you add the other non-cash benefit to the qualified employment income, then you get what we call accessible income. You get this one, accessible income. So when you get accessible income, then you go and look for all the reliefs in the question. Reliefs. So the reliefs that are due the person. There are so many reliefs. So social security fund, marriage, child education, old age. So we have discussed a number of reliefs that are available to the taxpayer and how it is applied. So that one too. Now when you subtract the reliefs from the accessible income, the answer you get is what you call the chargeable income or the taxable income. So always take note. For you to get a chargeable income, which you are going to now calculate a tax on, you have to get the accessible income before you subtract the release from it. Prince, is that okay? I hope you are with me.
Yes, sir.
Good. So today, what we are going to do, I'm going to solve one question with you. After that, I'll give you another question, that's assignment on this one for you to go and solve. Everybody is going to solve it. Either you do it in group or individual. So I'm going to solve one question with you, and I'll give you another one, and that will be so that we can move on to other aspects of the lecture. So I'm thinking that after employment income, I have to finish employment income today. We are solving questions. Now, this is the format. We have gone through all the things that we need to know. So we have to solve questions. But I'll solve one question with you. Then I'll give you some works on questions for you to solve for me. And we are done. Now, next meeting, we will start with what we call capital allowance. We'll start with another topic. So that's that. So let's solve this question. I think what do I do? Should I put it on the platform so that you can all see it, or I should just project and I should put it on in your platform, the question. Should I put it there?
Yes, sir. Yes, sir.
Let me see if I can put so that we can all go to course. And we don't have much time. When are we supposed to end this thing? Are you waiting for 4 weeks? Is it 1 month?
We are meeting for
It's
4 weeks.
Yes.
Hey, 1 month. I see. So this is our third week.
No, this is our third week.
I think this is the third week, yo. This is
Yes,
Yes,
our third.
sir.
So when we meet next week, we are done.
yes, so
Yes, sir.
It can be possible. Aden. You better we know we are a lot of things, yo.
we want to try.
and and the thing
Ayeka,
where we teach out to, that's where we examine. Oh, then I have to move fast. So I have to cover so many things before we end. Okay, you know, let's solve one question. So we solve one question, then when we finish, we go to if possible. If it depends on when we finish, we're able to finish fast. I'll start with the employment income, some aspect of the no capital allowance today. But if we finish and we cannot continue, I will leave you so that in the next meeting we look at the employment capital allowance and we will finish it. If you are able to finish capital allowance, I'm okay because the exam there are going to be 3 questions that you are going to answer. We have finished with solving my question, setting my questions already. So there, there are 3 questions that you answer. One question is theory throughout, so that one question theory. Oh, yeah, on all the things that we are doing, then there will be 2 calculations. One will be on this employment income, and one will also be on the capital allowance. That's what I'm planning to do. Then 3 questions, you are answering all. Hope is cool. Huh? Coursework, cool. Wow. Why? Who is laughing like that? I said, I'm saying, my mom, my yeah, we are done. I've given you everything. I've even said the question in advance. Okay, let me put the question there so it means that as we are solving, please, everybody should we cannot get time to be solving plenty questions like that. So as we solve this one, make sure that you get a question for me so that we will not have any issues. Mm-hmm. Yeah, attended the question. Okay, where is your platform? Let me put it there for you. Which one? This one. Okay. Okay. I think you should have it by now. Is it there?
Yes, sir. Yes, sir.
The question has come, right? So this is how you are going to get a question from employment income. So now I want somebody to read it for us. Somebody should just read the whole thing for us to hear. I want someone to read it. So as you read, so this is how a full question will be. Do you see it? I will see the one on the screen. Okay, somebody should read it for us.
income from employment. Mr. Frank Danso was employed by Ghana Trust Limited on 1st September 2016 on a salary scale of 4,500 by 500 to 7,500. As the financial controller of the company, he is provided with the following as part of his conditions of service for the 2020 year of assessment. 1. Well-furnished rented flat by his employer, in respect of which he pays 100 Ghana cedis per month as rent by way of deductions absorbed. II. Watchman allowance of 200 Ghana cedis per annum paid directly to Mr. Frank. So III. Risk allowance of 905 Ghana cedis per annum. IV. Leave allowance of 500 Ghana cedis per annum. V. Garden boy allowance of 100 Ghana cedis per quarter paid directly to Mr. Frank. So VI. Medical allowance of 680 Ghana cedis per annum. VII. Meals allowance of 50 Ghana cedis per month. VIII. Two maid servants each on wages of 200 Ghana cedis per annum. The amount is paid to the maid servant directly by the company. IS. Bonus of 40% of annual basic salary. S. Entertainment allowance of 400 Ghana cedis a year. Into bracket accountable. SI. Duty post allowance of 100 Ghana cedis per month. SII. Is entitled to a company car and a fuel for both official and private use. SII. We have 2 wives and 10 children. 4 of whom are in SHS in Accra, and the rest are gainfully employed. He caters for 3 of aged relatives. SIV. He contributes 7% of his salary towards the company's provident fund, which has been approved by the National Pension Authority. He also contributes 5.5% of his salary to the SNP. Required. Compute his tax liabilities for the 2020 year of assessment.
Okay. Okay, so that is the question. So when the question comes, you have the question in this way. You see that I know that some of the things that you have been treating and all the things I'm saying, some of the you have been hearing that they are in. As we read, there are some that ring bells in the ear that hey, we have done this, we have done that. Okay. So all of them we put in a question like this. In a question, you see that the only thing that we give to students, every question will give you this table. So when the question comes, it comes with a table like this. So after this table, don't commit them to memory. Don't just force yourself to. Well, every question will give you the specific table risk that you use, like fair, and that's why we call it tax-free amount. Every person's income, the first amount, which is free. You don't tax, it don't charge anybody. That's the tax-free that we were talking about.
Please, I can't hear from Sir. Is that still on?
Oh, sorry. I don't know why today my internet want to disturb me. Please, I'm back. Can you hear me?
Yes, sir.
Yes, we
Okay.
can.
So, I think where did we get to? I was going through. I was saying something that I realized that I was off. But I hope after the question we finished reading it, right?
Yes,
We
sir.
finished. uh,
You,
So
you were
what are
talking about the table.
the table? Okay. And I was saying that let me project it for you. I was saying that the table, after the table, every question will give you this table. So you don't have to memorize the table. Always, every question will give you the table to use. So please, when my network go off, don't go, just stay because I think this evening the weather here is cool and it is affecting my internet. So once I'm up, I'll reconnect so that we are. Now the table will always be given to you. This table will be given to you so that you after you have gotten the chargeable income, then you use it to do. So I'm saying that before you start using the format, you see that the question didn't give us direct uh, uh, basic salary. So now let everybody. That's what I want you to do right now. Let's calculate the basic salary. I want everybody to calculate the basic salary from this information I've highlighted. Let's get the basic salary for this question. Do you understand what I'm saying? I want everybody to calculate the basic salary for me. Are you people there? I hope you are there.
Yes, sir. We are
Yes, sir.
there.
Yeah,
Sir,
we
So
are
you are,
we are
here.
here.
so you are working. You are doing it. So I want everybody to try. But when you get a question, by all means, you calculate it yourself. So this information, the person was employed on 1st September. Use the last week, the idea that we use. First this, then you increase it, anniversary salary, 12 months, that calculate. So calculate the basic salary for me, everybody. After 5 minutes, I'll call somebody. If I call you, then you tell me your answer. That the basic salary is too much. I just want the basic salary. Just calculate the basic salary because that's the first thing that you have to do. So calculate it for me. Basic salary. Don't forget we are in 2020. We are looking for 2020 year of assessment. So you have to do up to 2021. Basic salary. Mr. Frank Danso was employed by Trust Ghana Tract Limited. Yes, who is almost who has finished? Or you need more time? Hmm. Basic salary. Let me see. I'm Nelson. Are you done? Nelson. Amponsa. Ampom. It's not Amponsa. Ampoma. Nelson. Are you done?
Somehow, yes, please.
Wow, look at what you are saying. The way you are saying the term crowd, somehow, yes. So, okay, Nelson, give me your give me your answer. What what figure? What is the base salary for this question?
I got 6,500 Ghana cedis.
Let me wait. I'm coming. You say you got you got 6,500, right? That's
500
right.
Ghana cedis.
Okay,
Yes,
good.
please.
Yes, let me come to the next person. Let me see this. Yes, who want to let me see
Sir,
yes,
sir, I got 5,625.
that's gift, right?
Yes, please.
Gift you got base salary 5,625.
625.
5,620. Okay, good. Yes. Interesting. Let me see who else? Aduboku. Osweb. Aduboku. What figure are you getting?
Sir,
Base salary. Yes.
hello.
I'm listening. Go ahead. What figure?
I'm in a car going to the house. So when I get down,
Aduboku, we are waiting for you. What is the answer?
Sir, is it?
What figure did you get? The base salary. Say you have calculated. Tell me your answer.
Sir, I haven't been able to calculate it because I'm in a car going to the house. So when I get to the house, I'll do
Okay.
it.
Okay. Who else? Who want to try? Yes. Tell me your figures. Letitia, have you done it? Rosemary.
So I've
Okay,
not
Letitia.
finished, but you've taken the question out. Please, can you?
Okay.
Please.
I thought on this one.
Uh-huh.
Rosemary. People are calculating things. I like but I like the way you are getting different answers. It means that some people go wrong. See. But the base is very important because that's the
Sir,
first
mine
thing
is
your phone.
6,500.
Say, who is that?
Letitia.
Let's okay, Letitia. Let's 6,000.
500.
Any other figure again? One so a different one. That is you to do something.
Doc, I
Because
had
who is this?
Rasmus.
That's one.
I had 6,000.
That what?
6,000.
6,000. Pepe.
Hey, sir.
Edim Broso.
Sir,
Exactly 6,000.
Exactly, sir.
Okay, good.
sir,
Yes.
sir. Gift,
Yes.
I've come back again.
Second
Sir,
degree.
yes, sir. 6,125.
You to go 6,125.
25. Yes.
Okay, so you have modified it. Good. Let me take the last one. Then we go and see. Who else? Who want to? Steven. Steven, you want to share yours with us? Hey, Adam Sana quiz ya. Adam Sana. Of course, you will be able to say different. You see what is happening now? Just basic scenario. I've seen the answer that almost you are all getting different answers. And if the base salary is wrong, you know the implication.
Everything will be wrong.
Oh no, everything cannot be. Don't mind finance, but you if the base salary is wrong, you can be getting your cash allowances, but your TCE will be wrong because you add correct cash allowances to the base salary, which is your TCE. And if the TCE is wrong, total cash movement is wrong, your rent and car element will also be wrong because they are all percentage of the TCE and your accessible income. So after base salary, you have to always get it. And because of that, we will also give you that somebody base salary is 30,000. I know you always it will be scale like this. Then you do it. Okay, let me take. Is there the other answer that somebody want to give another? Yes. Rosemary. Rose. Rose, what's your answer? Hey, Godfrey. Is it Godfrey? Godfrey. Is it Godfrey? The fast. And my people, they are you hearing me? Because the question is everything not to hear me. You hear? Do you hear me? All of you.
Yes, sir, we are hearing you.
Hey, and the question I'm asking some people, they are not marrying me. Okay. Now let's go to the let's solve it together. Because the answers I'm seeing here. How did you who want to walk us through his answer?
So let me try.
Gifty, go ahead.
Based on the question, he was employed on 1st September 2016. So we start with 1st September 2016 to 31st August 2017. And the basic salary for that.
Wait, let's go through. Let me write it because as I hope you can see my the Word document. You can see that one. This one, you can see this one. Okay, let's go. Do you see what I'm typing?
Yes, sir.
Okay, so now let's start. You said one. You start from where?
1st September 2016 to 31st August 2017.
1st September 2016
to 31st August.
Okay.
2017.
Good.
And the basic salary for that one was 450.
I would watch you 4,500.
Yeah, 4,500.
Okay, good. So that is the first one. Then we go to 2.
First September. 1st September 2017 to 31st August 2018.
31st August 2018. Everybody is watching what we are doing and you are listening.
Yes, sir.
Okay. So this one is going to what? It's going to
you add the 500 to the 450 to get 5,000.
5,000. Good. You are going. So at least when we are marking or when I'm marking, I don't mark finance. The base said this one, this is how I'm going to mark it. So step 1. If you get this one correct, you get a text for this. I'll mark it. So it is not finance that we are marking, but the process. So let's continue. Third one. You are doing well.
Okay.
In fact, you are doing well.
1st September 2019. 1st September 2018 to 31st August 2019.
31st August 2019. Okay, so what are you getting?
That one, it will be 5,500.
5,500.
But because we are calculating up to say should I continue? Because we are calculating up to 2020. Okay, so let's come to the next step. Then I'll explain that place. Okay. So the next step will be first 1st September 2019 to 31st August 2020.
Okay. And the base salary will be
Then the basic salary will be 9 out of 12 times
but
5,000.
the base salary for here you have not recorded it too.
Where? Yeah, that's what we are doing. It should be that place should be that place should be 6,000
That's what I'm looking
times.
But that's what I'm looking for. 6,000. Okay.
Times.
But I thought you finished everything before you. Okay. No problem.
Okay. Then let's go to the last one.
Last one.
1st September 2020 to 31st August.
Gifty is my today. Gifty is the lecturer. Gifty is doctor. Gifty is giving us all the people. Why I like that you are doing what 31st
August 2021.
2021, and that will be
the basic will be 6,500. But
6,000.
that's how we are going to do it.
At least this one is correct. So I don't see why you didn't get this answer. Okay, let's see. So you see that steps by step. And so you said we're going to explain something here. Explain to our 2021 is coming. Yes, you know. Yes.
When you see between 1st September 2019 and 31st, yes. If you look at we are going to spread the month there.
Okay.
So if you look at first, so should I continue?
Continue. Whatever you say, I'll write. Yeah, type it. You say what I type. Now, so what should I do here? Explain to us why we are doing what?
6,000 multiplied by 9 divided by 12.
6,000
This 6,000. 9 divided by 12.
Divided by 12. Why? And that will be
from 31st August 2019 to so help me that please.
Okay.
I don't have to explain it, but I was having the idea.
Okay. What is going to happen is that if you want to look at this, now we want 2020 income, which is here. And the 2020 income, see this date, this one start from 1st September 2019. So 1st September 2019, we go to October 2019, November 2019, December 2019. Then this one will end. Then we start from 2020, start from January 2020, February, March, April, May, June, July, August 31st. So that's where you are getting it wrong. That's why the answer you got to it's supposed to be 8/12, not 9. Check it well.
Okay.
2020 income is here. It's 8 months. Look at it. This one is 31st August 2020. So it means that when this one start from 1st September, you receive September 2019. That is in 2019. Then from September 2019, where do we go? Shall we go to October 2019?
Yes, sir.
That's 2 months in 2019. No. Then we go to November 2019, 10 months. Then December 2019, 4 months. So there's 4 months of 2019 income in this year. So if the whole thing is 12 months and have 4 months belonging to 2019, then remaining 8 months will be for what? The 2020. So when 2019 ends here, December 2019, The next date is 1st January 2020. So we have January 2020, February, March, April, May, June, July, August, 31st, 2020. That's 8 months. Please, I hope you have followed what I'm doing.
Yes, sir.
Do you understand why we are having 8 months there?
Yes, sir.
Good.
Yes, sir.
So that is why the answer you nearly got it, but there's some small margin that you miss because you make it 9 months. It will obviously, so it's 8 months. So now multiply 8 times 8 over 12 times 6,000. What do you get?
They get 4,000.
4,000.
Yes, sir.
Good. Now let's go to the second one. Yes. How many months will you be here?
4 months.
Huh? How many months?
So the same 8 months.
Hey, Mother. How can it be 8
No,
months?
say 4 months.
4 months. And which 4 months are we talking about? 2021 is not, we are preparing the account for 2020. So
Yes,
we need
sir.
only 2020 income. So, I know it's 4 months because we have 8 months already gotten. So let's only one 4 months. But the 4 months, tell me which it start from where to where?
They start from September to December.
September what? Yeah, it can't be September. Now, the 4 months.
October.
Sir, 4 months start from 31st.
Huh? Look at the
31st.
thing of, no.
It starts from 1st October.
It starts from 1st September to
1st
1st
October.
December.
Somebody is saying the right thing. Somebody, the
It
person
starts
is start
from
from
1st September to 1st December.
good, perfect. So the 9 months start from, because for the fourth equation, we have calculated from January to 31st August 2020. So the next date is 1st September. So the 4 months now come here. 1st September 2020, October 2020, November 2020, then December 2020. These are the 4 months left for 2020 to end. The rest we start from January 2021. We are not. So here it's going to be 6,500 times 4 months, 4 over 12. So you see that we are getting the 12 months for the 20. So 2020 now you have 8 and 4, 12 months for 2020. So how much would that be?
2,166.
Good. 2,100 and it's not point. It's
166.666.
66.6 is like this.
What? 2,166.666.
56.666. Like this.
2,166.66666. So
Okay.
0.67.
Okay, 0.67. The nearest. Okay. So now the basic salary that you were supposed to get for this question under consideration was supposed to be this one. Now add the two. 4,000 plus this will give what? Add it.
4,216.67.
No, you have to get 6,000. 6 something.
6,166.67.
So this is the answer I was expecting from you. This is the basic salary. So you see, the base salary was this 6,166.67, but people were getting 6,000. So when you go 6,000, this person almost got 6-1, but still, it's because of the months. So those almost everybody couldn't get the basic salary. So please, you have to master how we calculate the basic salary because it is very, very, very important for you. It's very, very, if you don't get the basic salary calculation correct. So now let's look at the basic salary. Let me see. This is how this is the solution. Actually, I'm going through the solution with you. So this is what we're supposed to get. Look at the base salary. So 4,005. Then you add it to this. Yeah. How will you see my screen? What the solution?
Yes, sir.
I don't know
Yes,
if you did. Base salary is this. So that is correct. 6166.67. Good. So now we have finished. We have gotten our basic salary. Now, once you get your basic salary, you have to also remember that bonus can be, if you have excess bonus, it's treated as part of what? Cash allowances. So let's go and calculate the bonus and see whether there is excess bonus. And if there's excess bonus, how much is the excess bonus? Because if there is bonus in the question and you don't calculate for the excess bonus, so that when you are listing your cash allowances, you can add the excess bonus to it. And you just say, oh, when you start working and there's excess bonus, then you say you are wrong. So go and let's do working for bonus and see excess bonus. If excess bonus, how much is the excess? Everybody calculate that for me. So do bonus calculation. You see there's bonus here. He said he received a bonus of 40% of the basic salary. So now we know the basic salary to be 6,001. So use the basic salary and the bonus information here to calculate the bonus tax. And let me see if there's excess or no excess. If there's excess, I'm interested in the amount of the excess bonus for me. Are you doing it? Are you doing it?
yes, sir.
After taxation is a lot of calculation, and I want you to practice because a bit by bit, then you get to know how to do it. So everybody should be involved. Try to calculate it. If you get it, whenever you meet it, you can. So do the bonus calculation, everybody. And I'll call somebody right now to tell me how did you do the bonus and what is the excess bonus, if any. Yes. Who has failed the bonus calculation? Who want to try? Who is trying? Gifty, are you done?
I'm on it.
You hear him on the crowd said, hey, you shall beware. Taxation, unlike taxation. It's not easy, but I think we are trying. Adupoku, Emmanuel. This one, tell me your answer. Adu. I say you are in a car. You have not reached. Okay, so if you are not reached, you no problem. Let's Abna Pepra. Abna. It's Abna here.
Yes, sir. Please, I'm on it.
Okay.
Remember?
Bonus. You see a bonus of 40% of the basic salary. Now you know our basic salary, yeah. Our basic salary is here. This is our basic salary. So use the knowledge from the last lecture. Do it for me. This is your basic salary, and the bonus is also given. So how do we do it?
Doc, please, I want to just contribute.
You want to do
I
what?
want to contribute. I want to contribute.
Aye.
You have to multiply 40% by the basic salary.
Uh-huh.
Multiply the 40% by the basic salary.
You want to see? So you want the first bonus? Let me see. Bonus 40% times what? This is 1. This is 0.7. Like this.
Doc, can I give an answer?
Aye.
I'm having 3,700. 3,700. So, Doc, you can write that one. So when you finish with his explanation, let me see whether I'll get the correct answer.
Yeah, 3,000.
It's 3,700.00.
Like this. Like this one.
Like, yeah, 0.002.
Okay. It's approximately 2 decimal place, so it's okay.
Yeah. So
All right,
let's
so
let him finish it.
So now let's go. 40% of the base salary will give us what? Oh, who was taking us through?
162.4.
200.
2,462.4.
462.4. Like this. Okay. So yes,
Me too. I got 2,466.67.
2,466.67.
That is 40% of the base salary.
Yes, sir.
Yes, please, Doc.
2,466.
66.67.
Okay.
Point
Let's take it.
67.
Okay. So after this, what next? Yes, who was taking us through? Okay, continue.
So after this, you find 15% on the new amount that you have gotten.
15. So I should find 15%. 15%. Meaning, I can be I'm true. I'm just following you. Now you are teaching me. So anything you say, all right. So I should take 15% of which figure? 15% of what? Hey. Who was? Are you there? Okay, let me continue. I think all of time I have to continue. Should I continue?
Yes, sir.
Hey, Shamu, one of my deeds. One person work at okay. Now let's look at this. So the bonus, you have been told that the person received bonus of what? 15%, 40% of the base salary. Now you don't know. Let's say 40%. So that bonus calculation, you see, we have 40% of the base salary. That's given us. So it means that this is a bonus that they pay to the person. This is the amount of bonus that the person received. 2,466 That's the amount of bonus. But the rule also says that bonus received shall not exceed 15% of the basic salary. So now let's go and weigh 15% of the basic salary. So what's the 15% of the basic salary?
So it will be 924.9.
15% of the basic salary is what?
924.9.
Approximately, you can make it 925. But because we are dealing with decimal, let's make it this way. So what this one means is that it's like we are saying that somebody received a bonus of 2,466 and his basic salary is 6,100 and something. So all that you need to do is that bonus calculation, bonus should not exceed 15% of the base salary. If any bonus exceed 15%, the excess will be treated as part of cash allowance. So look at this place here. The 15% of the basic salary is 924, but the bonus that the person received is 2,000. So you see that when we subtract this one from this, there will be excess bonus. So how much is the excess? That's why I wanted to hear from you that there will be excess of so much. So there's excess bonus of how much?
$541.67.
Good. There's excess bonus of 1,541, right?
Yes, 0.67.
So this is the excess bonus that we are. So this figure, you need it as part, you treat it as part of cash allowances. And you charge 5% on this. So there's a bonus tax of 5%. This one, this 924, which is not more than 15%, we start as well. 5%. That's all. So we said that any bonus that is in excess of 15%, the excess will be added to the person income. That's normally. But the portion that does not go beyond 50% will charge at 5%. So that's what we have done. So you do the calculation for bonus also, and that's it. So because of time, I think you have to learn how to calculate some of these things, because after taxation, there's our primary income. And when we are doing taxation anyway, it's employment income, you should be able to understand it very well. So that is what we are doing here. Now, let's take the format and start completing the answer, because now we have done the workings that we can do. So when we take the format, I'm using the format, so I'll walk you through the solution. When I first, I'll send the solution, everything to you. So you start with Mr. Frank Danso. Name of the, so if I mark it, this is how we are going to mark it. Mark the answers. So the name of the company is very, very important. You need to bring it. Are my people there?
Yes, sir.
Yes,
Yes,
please.
sir, we are.
Okay. Okay. When you are quiet like that, then So now look at the format. We are using the format. Mr. Final computation of tax liability for 2020 year assessment. Now look at some basic salary. So you see that this is what we calculated first, and you calculate this one yourself. So that's the basic salary. Once you get the base salary, you add all cash allowances in the question to the base salary. So let's look at the cash allowances. Oh, I wish I can. The question we can put it side by side. Okay, so this is a question. Now let's look at the cash allowances. As part of a condition of service. So cash allowances, we are watching my allowance. Why is that? It's a cash allowance because They say he receive watchman allowance of 200 per month, no 200 per annum, paid directly to Mr. Frank Danso. So you see that they are paying, even though he has a watchman, the amount is not paid to watchman direct. It is given to the employee, so I can give it to the watchman. So that we add it to him. So it's treated as part of the cash allowance. So you see that cash allowance is say 200. Then the next one, risk allowance 905. It's also cash allowance. So risk allowance of 905. So we list it. Risk allowance 905. Leave allowance. They are listed here. So leave allowance 500 per annum. For the whole year, everything is per annum. So leave allowance 500 per annum. Garden boy allowance. Let's say garden boy allowance. Garden boy 100 per quarter and pay directly to Mr. Fernandez. So because it is paid to Fernandez, so 100 per quarter, there are 4 quarters in the year. So you multiply the 100 by 4, you get 400. Then medical allowance 680 per annum. So medical allowance, you put it at 680. Then he has a meals allowance 50 per month. And we have 12 months, so you multiply 50 by 12, and you get this. Then you had duty post allowance. Duty post allowance is here. You see, you also receive 100 per month, so you multiply 100 by 12 to get the duty post allowance of this. Then bonus, you see, excess bonus. You have to show the excess because the bonus received was this amount. And the portion, 15% of the base salary, that should not go beyond it's what 295. So when you subtract that one from the excess bonus, from the bonus itself, there's excess bonus of 154. And if you don't remember this and put it here, and maybe there's a bonus excess, but you forgot to do the calculation, then you miss it. And once you miss it, it will affect your work. So if there's a bonus, you have to take your time and work it well. So now, either to be overtime to still, we have brought the overtime, but overtime will not come in here because after that one, excess overtime is also charged. You add it to the person's income. So that if there's overtime treatment different from bonus. Bonus, the excess is added to the person's income and tax knowing. After overtime, the excess we tax is 10%. That's all. So you see that all the cash now there's another cash allowance which we didn't use. Look at this entertainment allowance of 400. But I say it is what accountable. Once they give you entertainment allowance and they put it to that accountable, don't add it to any of your working. It means that money, even though it was given to Mr. Frank, so it's not his personal money, he's going to account to it. Because maybe he's the head or he's the headmaster or head of the department or whatever. It is the amount they give to you as entertainment so that you can use to buy water or drink for your visitors. That's what we call entertainment allowance. So if it's the right to be accountable, it means that the money is not for the employee directly, but he's using it for the benefit of the office, and therefore you don't use it in the accounts. Pretty much what I'm saying with the entertainment allowance. So when you see entertainment allowance only without accountable, that one there you add it to the part of the cash allowance. We are not adding it to anytime you see accountable, it means that the person is going to give accounts of how you use the entertainment amount. And because of that, you cannot charge the person. Now the garden boy and the security man, we are treating them here because there's no statement in the question that says that the building belongs to the employers. If the building belongs to the employer, assuming that the building belongs to the employers, how are we going to treat the garden boy and the security man? Yes. Assuming I ask one sentence to the center, oh, the building that they are living in is for the employer bona fide property. How are we going to treat this one? Assuming we did that, how would the treatment be? Yes, I want answers. Someone should explain to me. Let's assume that the building belongs to the employer, and there's a garden boy. There's a garden boy and security man. How are we going to treat it? Hey, let's get interactive. I'm the only one talking. Yes. Who want to explain? Are you there or you are gone?
Sir, we are here, but the network is not stable.
Oh, really?
Honestly, the network is not helping. Yeah, so sometimes it goes off and it comes. So by the time maybe it flashed in, you've almost done. Even when you were explaining the entertainment allowance, and you said when it's accountable, it went off. We try. Sometimes we manage to. Personally, I use my mind to manage to grab something. It's quite challenging. Please forgive us, some of us, but that's the challenge.
Is it like that for all of you?
We hardly get it.
Is it like that for
Some
all
of us,
you?
we end up just be there, and then later we listen to the recordings.
Let me
Because the
find out from.
network doesn't favor us. Not that we don't want to respond, but the network becomes a challenge for us.
Let me find out from the others. Is it like that for all of you? Like if I speak, they are breaking or?
No, sir.
It depends on the network at the area.
So it means that the network at your receiving end, that's where the problem. But it is not. Because if I speak and those who are on it a lot, you can hear me. So there's no breaking communication from my end. I was thinking that maybe it's from my end, but maybe there's internet challenges. Sometimes it can happen like that. So pardon us for that. That's unfortunate. But the rest, when I speak, I hope you can hear me. You hear that, right?
Yes, sir.
Yes, sir.
Oh, okay. And if that's the case, I'm saying that, assuming that the building belonged to the employer, how are you going to treat? Last I said it. How are you going to treat the security man and the garden boy allowance? Okay. Nobody is talking me that you don't want to answer. So I said that when the building belongs to the employer and there is garden boy and security man, the law sees them that they are working for the company, and therefore we wouldn't have added it. So assuming that there's a statement that the building belongs to, or the house belongs to the employer, then the garden boy and the security man, their allowance will not be treated at all because the building belongs to the employer, and therefore the law see the garden boy and the security man as working for the company more than even the person who's staying there. Okay. So can we continue?
Yes, sir.
Now let's look at, so now when you list all the cash allowances, including you see all the cash allowances have been listed. So overtime is here. No, a bonus, excess bonus is here. So you add everything. When you add this total, you are going to get this figure here. Then you add the total cash allowances to the basic salary here. So you see add. So the total cash allowances is 6026.67. Then you add it to the basic salary that you have here to get the total cash emoluments to be that. So this is the total cash emoluments. Add to the total cash emolument, if you have something, or if there is something you don't understand, please ask for me to clarify before I move on. Up to the total cash emolument. If you think there is something that you are not clear, you need some further explanation, please let me know before I continue. Silence means I can continue, right?
Sir,
Yes.
sir, so in the actual fact, is there any allowance given to workers when they go on leave?
That's our leave allowance.
Yes.
You are asking that because of what? The leave allowance. Huh?
Exactly.
No, when you are going on, so sometimes you have sometimes. Okay, so when you are going on leave, we don't give allowance per se, but sometimes some people they don't go for the leave. They sell their leave, you know that, and they can get allowance. But this one, they said that he received a leave allowance as part of the his condition of service. So in actual sense, when you are going for leave, yeah, some company they give you there's allowance. Maybe you are not going to get all the money or allowance, but there are some allowances that they give to you as you going for the leave. Some people they don't go for the leave, they collect it in terms of what cash. So that's it. Why? Okay, so let's continue. So when you get all the allowances together, please, I hope after the total cash emolument, everybody is okay with that. Huh? Hello?
Yes, sir.
Up to this one, everybody's okay with that one. So if that is the case,
Yes, sir.
once you get the total cash emolument, you can let your microphone. Because now I want Santa, I want it to be interactive. Because of the network and sometimes I just don't know whether you are on or off. So if your background is not like children are there who are going to disturb, you can make your microphone on. So at least, like if I ask question, I have to be, you have to engage it so that we can hear. But if you think your background is such that people who are going to decide no incident off your own, that's one thing. Because, yeah. So once you get your total cash emolument, the next thing is to treat the rent element and the car element. Now you see the rent element. Here, the rent. Why are you taking 10%? Do you know the reason why we are taking 10? Okay, like in the question, where is the question? This is what we are going to see. Good. Now look at how they stated rent. Well furnished flat by which employer he said in respect of it he pay 100 cedis per month as deduction from so the word when you say well furnished rent, what percentage are we taking when a person receive an accommodation with a well furnished accommodation? Yes. What
So
percentage?
10%.
So here
10%.
all you need in the exams, we will not see any percentage, but the moment you see well furnished accommodation or shared accommodation or accommodation only, you should remember the percentage attached. So once you see that he is giving well furnished accommodation, 10%. That's why we have 10%. So So 10%, you calculate 10% of the TCE. So one, rent. Because of the well furnished, we are going to charge him 10 times the TCE. So the TCE is 1,000, so 10% of the TCE. If you look at TCE, 10% of it, you give us 1,219. But because the question said that he was paying, because he knew that he was going to be charged, when he asked his employers to deduct 100 cedis per month as way of paying the rent. So he said that well furnished rented a flat by his employer, in respect of which the employee pay 100 cedis per month as rent by way of deduction at source. So before I even clear the second be 100 cities, month to be 100 cities. So what you do is that when you are solving a question, I have something like that. First, you calculate 10% on the TCE for us to know the total amount we are going to charge him for rent. But if the person has been paying some in advance or at source, then calculate the amount that you have been paying. So we say that you have been paying 100 per month. So we put 100 by 12. By the end of the year, he has paid 1,200. So it means that out of the 1,219 that he has already paid 1,200. So you subtract it from it, the net is 19.3. So this is where we are adding to the TCE. You understand what I'm saying? So if you get a question and the person is not paying anything in advance for rent, let's assume that it was he received let's assume that he was giving or provided well furnished accommodation by his employers. That's all. He was not paying anything in advance. Then when we come here, 10% of the TCE, that's all. This whole amount would have been added to the total cash emolument. But because the employee asked them to take 100 from his salary for month in respect of rent, when you finish calculating 10% of TCE, whatever you get, go and less the rent that has been paid in advance from it. The net is what is added. Then go to the car element. Now, let's look at the car element. What was the condition that he was provided? Look at it. He is entitled to company car and what? Fuel. So here, the condition that he was given car and fuel only, no driver. So when an employee is giving car and fuel, what percentage do we take? What
The
percentage
only
do we
car.
No, it was provided with car and fuel. See, there are two things. Car
10%.
and fuel. Do you agree to that as 10%? Yes. Once you are giving car and fuel, if we are giving car, fuel, and driver, what percentage are you taking?
That one will be 12.5%.
Good. 12.5%. So because you are giving car and fuel only, so we are going to take 10% of the TC. And this one, he was not making any payment in advance for it. So look at it. Car element, 10% of total cash emolument. You calculate it, and the whole thing, you bring it here. So you see that now we have rent element, we have car element. The two, you add it to the total cash emolument to get the qualifying employment. But one thing that you have to remember is that the car element, they have limits. You see, I told you that if it's 12.5% of TC limited to maybe 1,500 per month. So the maximum amount that you cannot go beyond. So you see that this one, the 10% of TC limited or restricted to 15,000. So when you calculate and it's more than 15,000, you disregard and use the 15,000. But this one, 10% of the TC is just 1,219. So it's within. So we are using the 1,219. So you add it to this one, then you get this total amount. When you get this, then now you come to the other non-cash benefits. The other non-cash benefits, we have the maid servants. So you see two maid servants. Two maid servants each on wage of 200 per annum. The amount is paid to the maid servants directly by the company. So once the amount was paid to the maid servant directly, we cannot charge it to Mr. Frank Dan so as cash out. That's why they will come as well other non-cash benefits. So you treat other non-cash benefits, 2 maid servants, but then you add it to, so you get total accessible income to be this. How we have seen how we are using the formats to do this. Huh?
Yes, yes, sir.
It's very simple. The format is, you have to follow the format. So I will give you something to, I will give you work to go and try. Use the format. The most important thing is for you to be able to calculate your base salary from this, whatever scale that will be given to you. Then after that, from there, you follow the format. And if you follow the format, you are able to get everything. So now, you see that we have gotten the accessible. Once you get accessible income, then you think of the reliefs. Now, when you look at this question, let's take the release one by one and see the one. So if we read it, then you see that he is he has 2 wives and 10 children, 4 of whom are in senior high schools in Accra, and the rest are gainfully employed. So this first part, how do we treat that one? Yes, I want somebody to take us through that. Yes, who is trying? He has 2 wives. Oh, I know that we Anna.
You take them one by one.
You take what?
He has 2 wives.
So how are we going
You
to treat it?
You
What figure are we
subtract
going to do?
1,200
Why? Why 1,200?
because he is married. So
But
he
he has
has a
2
relief of.
He has 2 wives. He has 2 wives. So I want you to explain to me why 1,200.
Say under the reliefs, when you are married, we subtract 1,200 from it. Properly married under the ordinance, you subtract 1,200.
I want you to tell me that the law says that even if you have 10 wives, you just recommend only one. That's all. And every marriage is 1,200. So even the 2 wives that you see in the question that he has 2 wives, we are just testing your understanding of the law. That some people, if you are not well informed, you say you have 2 wives, you say that each wife is 1,000, then you have to use 2,400, and you are wrong. So you have to. I want you to tell me that the law says that if you have even 3 wives, only one is going to be recognized because your marriage certificate. So that is what I want. Yeah. So you are going to. So first we have marriage relief, 1,200. What about the second part? He has 10 children. Yes. I want somebody apart from
for the 10 children, we only recognize 3. And under
one
the law, and one is 600, so that will be 1,200.
Hey, one is 600, and you have 3 children, and then you get 1,200.
1,800. 1,800.
They said the child is up to 3.
Up to 3, yes.
1,800. Say.
So that is that. So you see that this is when you get accessible income, the rest is the. So you see, yeah. So you see that marriage. Yes, the marriage is 1,200, one wife. Then the child education is also here, 1,800. Then for the question, he take care of old age. See that I said he cater for three of his aged relative. Aged relative, one is what? 1,000. And he has 3.
1,000.
The law allows only what? For 2.
2.
So you see that agent dependent, we're going to use 2,000. Then you contribute to Social Security Fund. You contribute 5. This is how we apply the review. You contribute to 5.5% of his base salary. Now you know the base salary to be 6. So all you go there, you go and work 5% of your base salary in the question. And you get Social Security Fund of this one. This is another relief. Then Provident Fund. They say you contribute 7%.
Hello, doctor.
Okay, I'm back. Yes, I went off.
We didn't hear you.
Yeah, I saw it. I went off small, but I'll go over again. I was saying that even though it has all the release, so see when you get here, you just read the question and take them one by one. They release the person is now 5.5% of base salary. Just go and calculate whatever basic salary that you have here. Calculate 5.5%. It's a relief. You're not going to pay any tax on it. So that one is a relief. Then Provident Fund, the question is a contribute 7%. Go and calculate 7% of the base salary and put it there. Then he's married. Responsibility or marriage relief 1,002. He has 10 children, but only 3 we are going to consider. 3, 1 is 600, so 6 times 3, 1,800. Taking care of agents. So you see, you list all of them. These are the reliefs. As per this question, these are the reliefs. There's nothing that disability reliefs is not there. Children is not there. So you see, we talk about so many reliefs, but not all of them are here. So if it's not there, you don't bring it. You bring only those that are there. So that's how we do it. So now that we have gotten all our reliefs here captured, we total the reliefs, all the reliefs here. I get total relief. So this is the total relief. The relief is less. We subtract the relief from the accessible income. So you see that we have our accessible income of 13,832. And we have total relief of 5,700. So we subtract the release from the accessible income to get what we call chargeable income. So this is what we call chargeable income. So the format is for calculating chargeable income. That will help you to get the taxable income. So this is not a tax show. So the question says calculate his tax liability. But this format will help you to get taxable or chargeable income. Chargeable income is what you can calculate the tax on. So now that we have gotten the chargeable income, we are now going to calculate the what? The tax on it to answer the question. Now to calculate the tax, this is where now you use the table. Now look at the chargeable income, 8,061. So you come here, you do that working to the table that was given to us. The table that was given to us. I hope you remember this one. Let me see. Next 1,000 to 14417. Okay. So next 1,200. Okay. So when you finish and you get your chargeable income, the next thing is to calculate the income tax based on the chargeable income. So the table that has been given to us, so in the question is the table. They give us the chargeable income, look at the table, they'll give you the chargeable income. Then they'll give you the rate, only that one. But when you are using it to work, you can expand it, you can add columns to it. So you see that we have chargeable income, the amount that you have to be taking is here. This one will always be given to you. Then I said chargeable income remaining. Chargeable income remaining. I've created a column. That you can add it. And you can also bring it to the end here. Like chargeable income remaining. It's not compulsory, but sometimes if you bring it, it makes your workings very easy. I must say that some people can use the format, do everything calculation, they get to chargeable income correct. By calculating the tax itself, then they get it wrong. So if you have done a difficult thing, this one is very simple. So this is how to calculate the tax on the salary income. So first, you need to take the tax-free amount first from your salary income. That's the first thing, because that one, every taxpayer income, that we have to take that one off before we calculate the tax. So the question is, first 3,822 is free. There's no tax on that amount. Look at it. The question that gives is the first 3,828 is free, no tax on it. So when you finish, in the salary income you have got, you have to subtract that thing for the salary income first. So what I'm saying is that you have the salary income of 8, this figure 8061. So here you see that we have salary income 8061, then you subtract 389 from a 382. 382, you subtract it from this one. When you subtract 382 from this one, we are getting 4233.16. This is the salary income remaining after taking the tax-free amount. So, and the amount you have gotten, the rate is free, so you don't charge anything. So there will be no tax on this amount that you have taken, no tax on it. Now, once you take the first one, you have to always remember the balance left, because it's the balance that you are going to use it to work. So now, when you take the 1,320, 820 from this one, from the salary income, we are left with 4,233. This is the amount left that will go to the next band. Well, so the next one, when we go, we should take the next 1,200. So the table will tell you how to apply. So when you look at the table, just first take this amount. That one is free. When you finish and there's some of the income left, take the next 1,000 to 5%. The next 144. That one to 10%. Then if the money sum is there, you go to the next 1,750, 17.5%. Then exceeding 38,000, then whatever percentage is there, 25%. You use it. So that's how the table is. So when you yes, ask.
Please, bring the solution. The solution for us.
That should bring what?
On the table. Oh, I think you have deleted it. I saw something 803.
No, this one. This one, the 800.
The solution.
The 800 that the 800 that you see.
Yes.
That 800, no, I deleted because I was using it to teach different people, and I was using that as an example that you can have a question that they say, take the 800, take this amount. So that is why you'll be taking from it. That's why it was there. So it is not part of this question. After this question, the question we have to take 3,000 first from the salary income to get the remaining. The next level, so we should take 1,002. The next level to 144. That's how we go by it. Is that okay?
Thank you, sir.
Okay. So now when you get your salary income from the table here, this one, then you go to the last part where you are calculating the tax. So the first one now. Now when you come to the second stage, from the previous stage, our balance left for salary income to calculate is this figure. So we are now going to take the next 1,002. So the next 1,002, you are taking it from this figure. This is your balance left now. So we subtract. So I bring the balance here again. Then I take the next 1,002. So when you take the 1,200, subtract 1,200 from this, we are going to get a balance of 3,033. But the tax, the 5% here is on the 1,200. So you calculate the figure you take. That's why you calculate the tax on. So if you take 1,200, then the tax 5% on 1,200 to give you what? 60 cedis. So that's the first tax we are getting on his income. The first 1,002, you charge 5% on it. So you get 60 cedis. That's 5% of 1,002. Now the income has not finished. We can go to the next level. But now you have balance of 30,000 left. So when you come to the next level, you should take the next 1,440. So salary income remaining is this 3033.1. So the next 1,004. So we take 1,004 from this one. Then when you take the 1,004 from this, then you start 10% on the 1,004. So when you start 10%, you get 144. But now when we take this 1,004 from this 3,000, you see that the balance level is 1,593. But the next range, when you look at the next, if you look at the table, the next is supposed to be 1,750. So before we can go to the fifth round, before we can go to the next one, we have to subtract 1,700 because that is what is there, 1,750. But after taking the 1,440, the balance left is 1,500. So we cannot subtract the next balance from it. We get negative. So when you do and you get to a point that you cannot subtract the next figure from it, whatever amount you have here left, you treat it as the tax. So you bring everything. So you see that here you have 1,593. Everything has been brought here, and there's no salary income again. Then you charge it here, 17.5% of this figure. Then you get this. When you finish, then you sum all this thing together. The answer you get is 482. That's your tax on the income. If you are doing the cumulative, it means that by the time you finish, the tax figure will show direct. But if you are not using the cumulative frequency and you just go by the first one, then when you finish, you have to manually add the taxes. So that is it. So this becomes the total income tax. So when you do this way, total income tax that he is supposed to pay on this salary income is 4,820. So that's how we calculate the tax. Are you okay with that one?
Yes, sir.
Yes, sir.
Okay, good. So when you get the question, yes.
Sir, you are to calculate, or you are to subtract 1,007 and then calculate 17.5.
Yes, if this figure after taking the 144, if maybe assuming, so this is an example. So assuming that you take the 144 and take 10, that the balance here is, let's say, you still have something like 1,800. Now assuming we have 1,800 left, because the next band say we should take 1,700. It means that we wouldn't have done this. We will just subtract the 1,800 from this figure, 1,700 from this. Can make sure have next 1,700. Then we subtract it. Then we get a balance. Then we charge the 17.5% on 1,700. Then we go to the next. You see, that's how we do it. But because the figure here, after taking the last but one, the figure here is 1,500. But the thing say which the next one is 1,700. So we cannot deduct. If we deduct, it's not possible. So you take all the amount left here and you put it here as the next that amount. we're going to charge 10% on it to get a tax.
That's where I have problem.
Oh,
Why? Yes, my problem is that why should I calculate the 17.5 on that amount since it's not up to what they are asking for?
Good.
I
You
think
see?
it should be that we should treat it as free money to be.
Hey. Free money. After they have given you this amount here as tax free, anything when you subtract, now I count 1 cedi, I count 2 cedis in per, still you charge it at what 17.5%. That is the higher you go, progressive. The higher you go, the higher you become. So it's graduated as you are going, then the rate increases. So if your money is big, it can go through all the range. But if it's not too big, 1 or 2, then so don't just say that the 1,500 left is free money. Even if it's 2 cedis left, which has gone to the next bracket, must I apply the rate there accordingly. Why?
Okay, sir.
Good. Now when you finish this, we are not done because the question says that we should calculate the total tax liability, not only income tax. We should calculate compute his tax liabilities for 20. So it's not only income tax. So when you find that, you come and do summary. So the income tax on this salary income, we have income tax on salary income, which is coming from the table. The total income tax, come and pick it. That's 60 plus 144 plus 278. You add it. When you add it, you get 4828. So once you come and pick that one, that's the income tax. Then there's a bonus tax, 5% of bonus tax. Don't forget that the bonus was excess, but there was a portion that was not excess. So you see that the bonus tax is 5% on that part. You have to also bring it. If there's overtime tax, you have brought the overtime tax also. So when you put everything together, they become the total tax liability for Mr. Prime Danso. So that ends the question. So at this point, if you have question, you can ask.
Doc, I have a question.
Comment and then they are welcome.
My question has to do. Doc, are you there?
Yeah, come again.
My question has to do with the calculation of the basic salary.
Calculation of the basic salary.
Yes. Can you please give us the slides for how you calculate it? I want to ask a question there.
We should go over the basic salary again.
No, I want you to present the workings for the basic salary. I want to ask a question from that angle.
Okay.
Your solution to the basic salary.
This is a basic salary. Let's go.
Yes.
It's on the screen. So the first one, it was 1st September. Yes. So I can ask.
There's something on the screen.
That's what?
Because I'm coming on. That's fine. That's fine. I want to ask. 1st September 2017 to 31st August 2018 is 1 full year.
Yeah.
That one is here. Then when it comes to 1st September 2018 to 1st August 2019, it's another 1 full year.
Yes.
That's fine. When it comes to 1st September 2019 to 31st August 2020, it's also 1 full year.
Yes.
My question has to do with why did we divide that 6,000 by 8 out of 12?
Okay. Now, why we divided the 8 out of 12? This is 6,000, right? Here. Talk about this place, right? Okay.
Yes, sir.
Now, watch something here. we want 2020 only 2020 income. That and there is 12 months. You see, from 1st September 2019 to 31st August 2020, it's 12 months. You know that it's one full year, 12 months. You know that?
Yeah. Yeah.
Okay. Let me do something here. So, technically, what we are doing here is this one. It's like the month involved here. Let's list them. So we have September. Let me do this one so that you can understand it well. So you have September 2019. Let me do this. You agree to that?
Yes, sir.
You have October 2019. Then we have what? From October, go where? November 2019. Then we have what again? December 19. 2019 has ended. Then the next, because it's supposed to be 12 months. So the next thing is going to what? January 2020. Good. Then we go to where again? February 2020, right?
Yes.
Hey, got it. Then we go to March.
Yes.
2020. Then we go to April 2020. We go to May 2020. Then we go to is it June?
Yes.
2020. We go to July 2020. We go to August. You got it? This is where it's up to. August. So the date we have here at 1st September 2019 to 31st August 2020. These are the months involved. September 2019, October 2019, November 2019, December 2019. These are 2019. Then January 2020, February 2020, up to 31st August 2020. When you count, it's 12 months. 1, 2. When you count, it's 12 months. Do you agree that it's 12 months? Good.
It's
Now,
12 months.
good. The 12 months. Now the question is, we want 2020 income month that are within this range. So you see that from this one, from September 19 up to December 19. That is 2019. That is not. We don't need this one. You get it?
Okay.
The only 2020 information was that from January 2020 up to 31st August. And that is 8 months of 2020. So that's how we got the 8 months multiplied by the 6,000 there. The 6,000 is for 12 months. But we have seen that out the 12 months, 4 of the month is for 2019 and 8 is for 2020. So if you are sharing it, then it's going to be 8 months after the 12 months. 8 months after the 12 months, times the 6,000 we are sharing. That's where we get the 4,000.
So that you will limit it to 2020 year as far as this is concerned.
You say what?
What I mean is that so when you do that, you want exclusive 2020.
Exactly.
Yeah, 2020. Okay.
Yes.
Okay.
Yeah, 2020 exclusively. That's what we want. So that's why when you come to the last one too, we see that one to here. So now this one will be like this. So now that's it. So now I hope that one is clear. Now let's look at this one. When I look at this date here too, it's 12 months. But the 12 months, the months involved stuff. So now tell me what are the months involved? Tell me it's what?
For that October.
No, start from September.
September. We have October, we have November, we have December.
I want the year. Don't that mention. So October, then November. That's 20.
Yes.
Then what? December.
2020.
Good. Then 2020 ends here. Then from here we go to where? We go to January
2021.
And you go to February 21. And also because it will go like that to where? To is it 31st August 2021. But we are not interested in the 2021. All we want is what? 21. 20. So how many months of 2020 is here? We have 1, 2, 3, 4. So 4/12 times the amount we are sharing there. So technically that is what we will. So here the relevant years are this. And here we have this. So these are the months that we are interested in. That's the 2020. So you see that look at how it is. So now you are getting January 2020, February, March, April, May, June, July, August 2020, September 2020, October 2020, November, December 2020. As now 12 months. All 2020.
Yeah.
Do you get it?
Yes, sir.
So that is how we got the answers.
Doc, I also have another question.
Okay.
The next question has to do with, can I please see the present the federal income table for us?
Where?
Respectfully, yes, the federal income. I want to have a full view
This
of
one?
the table. Yes, sir.
This one or the table?
Doc, the table.
This one? Or the one in the question?
Table where we have the tax and then the accumulated aspect of it.
This is it.
Yes, Doc. But I wanted to find out the rationale behind the chargeable income. It was wanted to find out why the tax rate wasn't applied onto the balance after the chargeable income, but rather it was applied on the chargeable income. I want to find out the rationale.
We want to find out why the rate, like, let's assume that
why the rate was charged on the
5%. This 5%, not calculated on this.
On the balance after the chargeable income, but rather it was calculated on the chargeable income itself.
No, I don't get your question.
The calculation. What I mean is that
use the figures here. Let's use you be specific. So maybe 5%. Why was it not charged on maybe 3? Is it a 3 or a 3033 or
Exactly.
So
why was not charged on the 3033?
It was charged 200.
Yes.
Good. That is what we call progressive income tax system. Now, if we are to calculate the percentage on this trade, it means that we are doing one shot. It's not progressive. And they will have after taking the first tax, this 4, this is the balance left. Here is whatever, like it will be just once. So if the person income is 20,000 or 50,000, we just calculate once, and once we calculate 5% on this, we are done. We can't go to the next level again. But it's progressive. We say pay as you earn. There are ranges, so we don't take. When you are calculating income tax, you don't want the tax burden to be so much on the person. So if the money is big, and you calculate the taxpayers suffer more than when they are taking in bit. So that's why some people, when they are government is coming to pay them huge sums of money, they want it to be spread. So they pay in bit by bit, because if it's big and you calculate the tax on it, then the tax you are going to follow. So the reason is that the pay as you earn system says, for the charitable income that we get, we don't have to calculate the tax rate on the bigger amount once. No. Because when we calculate the 5% on the we are done. We can't go to, there's nothing to calculate. So the system has come out with portion of the person income at levels. So we take the first 1,002 of the income, take it and charge 5% on the 1,002. If when you finish and there's some of the income left, that I can go to the next level where we can take 1,144 from it. Then let's take 1,144 and we charge the 10% on that one. When you subtract 1,144 from the previous bar and there's still amount left, that I can go to the next level where we can take 1,750 from it, go there and subtract that and charge it 17.5% on 1,750. So after the income tax, this we don't calculate it on the charitable income, but the range that the question will give to you. The only place that you calculate on the charitable income is the last one where you have gotten to a point like this, where the charitable income left is 1,593. But the next amount we are supposed to subtract from it is what? 1,700. It means that it's not possible for you to subtract 1,750 from 1,500. So it means that we cannot go to the next band. So we bring everything left here and charge it at the applicable rate there and sum it. That's all. Are you there?
Yes, Doc.
Mm-hmm. How about taxing? That's the rationale. Pay is progressive tax system. It's not flat rate or something that we pay once, one shot. No, not to progressive.
So finally, Doc. So after deduction, the first three, the balance of 4,233.16.
The balance of
233.16. Those balances, what are you going to use for?
What are we?
What are you going to use for? Those balances.
They are there to help you so that you don't make mistake, because it's like we are doing depreciation, what we call reducing balance method. Always the next amount you are subtracting, you subtract from the previous balance left, not the main balance. So as you are going, if you don't keep track of the balance left after taking the previous level, then you will be mistaken. Because the main one we started from 8,000, but as you are going, the income will be reducing. So at any point in time, you should keep track that, okay, this is the income left, this is the amount left, so this is what I have to subtract from. That's why I always advise to them that you create a table. But if you think you can point them on your calculator and always know that, oh, after taking the first 3,800, the balance left is 4,000. So if I'm taking the 1,002, I'm not taking from the 8,000 a year again. No, you are taking from the balance left. Because now the taxable income is 4,200 something. So the 12,002 will be taken from this figure, so that you charge the tax on it. But when you go to the next level, remember that now when you are in the third stage here, your taxable income is no more 433, but it is 433 man. You have taken 1,002 from it, so it is now this 3,030. Then you take 144 from this. So together, so always you have to, if you are at one level, you have to know the closing balance or the taxable income left that you are going to subtract the next band from it. I know whether I have you get what I'm saying.
Yes, yes, yes. I'm grateful.
Uh-huh. So it's like reducing balance. When we are doing always the previous year balance, that's why you're going to subtract current expense from it in that order. So at any point in time, you should be able to keep track. And that's why I'm saying that this is technical. Sometimes some students they are able to do everything from here, cash allowance, get the chargeable income correct here. But when it comes to this simple tax calculation, then they get it wrong. So they don't give full marks. Because the question is structured that if you work to the chargeable income, it's about 70% of the work done. Then you just use the 30% here to just see whether you can calculate the tax. That's all. So after that, we have seen how we can calculate the tax. So now you can take a full question and calculate everything. That's what my next thing is going to be. Unless maybe somebody have question. That's the end of the question. This is how to approach this question. Yes, if you have question, you can ask. Yes, if you have question on the employment income, please you can ask before I close the chapter on that. Because now what is left is questions that you'll be solving on the employment income. I'll give you questions for you to try your hands on because whether you like it or not, exams, everybody is going to do something like it, and you get a full question and you are going to do everything. So if there's question, you can let me hear it. I think we are good. Everybody is cool, right?
Yes, sir.
Good. So now I want to give out. There's a question I'll post on your platform for you to maybe from tomorrow going so that you will try. So by next week, when we meet, by then that you are done with it. So that is the next thing that I'm going to do. So now it's two things. We have that is the employment income. Now I have to bring in another topic that is capital allowance. And I wanted to start that one on a different way, but since we have enough time, if you are not tired and you are okay, we can add on a bit. I have to bring in the capital allowance so that next week we continue with it. Because after the employment income, I think with what we have done, when you get any questions on it, you'll be able to answer it. True or false? True. I've answered it
We
for you.
will try.
Yes. By every question too, there will be some let me see. There was a question. I gave some people question. Let me see if I can get uh, let me look for question for somebody to for you to calculate the base salary for me. Last one before we cruise. Today I'll cruise early because I'm done with the employment income. I want us to solve some. Let's. I think there's a question. I gave some questions somewhere. Let me see. Okay. You have employment income, employment income. Okay, not here. Please just hold on. I want to get some question for you. Let me see. Mhm. Okay, let's try this. I think there's a question here. That creates 2 hours. Okay. Now, I'm going to project a question on the. Oh, is it this one that we have solved? Okay, I think this one. This one you have solved this one. I want the new one. I'm trying to see if I can get a new question for you too. I'm trying. So the capital allowance, maybe I'll have to start the capital allowance, or you want us to try another one on the employment income, or we should start with the capital allowance.
So that you give us the question, that we try our hands on it.
Let's try
If we
our
are
hands
not
on
able.
it. That will be better, so that
Yes.
the question I'll give to you, there's some small. See, for every question, we see something new on it. Then, but most of the thing we have discussed almost all the things, but not all of them have been featured here. You see, there was something about it's a provident fund, which we have not done that one. 16%. There's something on this thing over time. When we're looking over time, you have to be very careful over time. If the person is not qualifying junior employee and is a senior staff, the person you see over time, you should know how to create it. We normally use it as part of the cash allowance. But if it's a junior qualifying staff, then that one can do all the calculations that we have been doing. So now let me introduce you to the capital allowance before capital allowance. Let me bring it for my strides. Transition and declaration. Okay. Now I talk of capital allowance. You see, in the normal accounting, where the sole proprietor or any business, if they want to determine profit or loss for organization or activities, all that they do is that they have profits. Let me do whiteboard. I want to calculate something for you. I want a new document. Okay. Yeah. It's my screen showing. Okay, you are seeing the screen. So the practice is that a normal or a businessman, the people pay tax on the net profit. That's the normal companies. So they pay tax on the net profit. So if you have a gross profit, let's assume that after doing your trading account, sales less cost of sales, you have gross profit. When you get gross profit, I'm just using it to explain the concept of capital allowance. So when you get a gross profit from trading, What do we do in business if you want to get profit or loss? When you get profit, assuming the profit is this net profit, gross profit, what do? We add
You say
other incomes, right?
yes.
We add
Yes, sir.
we add other incomes, all other incomes like rent
Commission.
receive, commission, all those receive. We add all of them to this. So let's assume that other income like commission receive, we have all of them here. Then we add it to this one to get total income. Total income like this. So when we get total income, so let's assume that this is our total income. Then we less expenses. Less expenses. Now the expenses, there are many. Sometimes we can have printing and stationery. You have wages, return inward, outward, advertising, transport, a lot of expenses. The law allows list all the expenses, but within the expense, we see something like what? Depreciation. You remember that one? That we charge depreciation as expense, right?
Yes, sir.
So because of the depreciation, companies hide behind depreciation just to pay small tax, because depreciation technically is not a cash item. All expenses that you mentioned, they all constitute an outflow of cash. When we are paying advertisement, the money go out. When we are paying for printing or stationery, all expenses, money go back. For depreciation alone, we don't give money to anyone. It's a prudence concept. It's conservatism concept that says that whilst you are using machines and assets, we have to be wise and put aside some money so that in case the assets destroy, we can get quick money to replace it so that there will be no break in production. That is the idea. So depreciation is, though we treat it as an expense, but for tax purposes, depreciation will not be regarded because it is part of the income profit. And I'm more towards depreciation, but the law allows it to be treated as expense. So people hide behind depreciation, so they can put in so much. Oh, our assets depreciate by 20% per annum. Then they live and they pay huge sums of depreciation. Because when the depreciation expense become big, your total expenses are going to increase, and therefore, when you subtract from the gross profit, your net profit will be what? Small. And if you have small net profit, it means that you are going to pay tax, small tax. Are you following?
Yes, sir. Yes, sir.
So, for tax purposes, the company and the sole proprietor, they are allowed to prepare the account the normal way. Just prepare your trading account, your gross profit, just include your depreciation, everything, and determine your net profit. So assuming that we have list all the expenses, then we have gotten, let's say, our net let's assume that our net profit after taking all the expenses which include depreciation, our net profit is, let's say, 10,000. That's our net profit. This one. When we report or when we submit the returns to GRA, and so your net profit is 10,000, and your depreciation, let's say, depreciation is something like you have depreciation of 2,000. All the for tax purposes, the amount of depreciation that you have paid or charged will be added to your net profit that you have reported. Always for tax purposes. If you want to calculate tax for companies or sole proprietors or partnership, net profit that you have reported, you add back the depreciation component to it. But when you add it back, in place of the depreciation, you give what you call capital allowance. Capital allowance is just a taxman's depreciation. For taxation purposes, taxation doesn't require or deal with depreciation. But the taxman depreciation is what you call capital allowance. And the capital allowance is granted on assets that are depreciable. So what happened is that all the assets that you are using, motor vehicle, plant and machinery, there are classes of assets that you place all your assets into the classes, and each of them have their rate of depreciation. We calculate the depreciation or the capital allowance on the assets for you to be able to know the capital allowance that will be granted. So that's how come we are coming to look at capital allowance. Capital allowance is just depreciation for taxman, tax person. So for tax purposes, depreciation will always be added back to the net profit reported. Then in place of depreciation, a capital allowance will be granted. So now what is capital allowance? As I've already said, the depreciation of fixed assets, as we see in financial account. This is why I explained that for tax purposes, depreciation is not allowable deduction. We don't allow depreciation to be added or to be subtracted from the expenses. But in place of depreciation, you have to use what we call the capital allowance. So when you talk about capital allowance, we are talking about allowance that are given on assets or depreciable assets. So the question is, what is depreciable assets? Depreciable assets means assets to which, or assets to the extent that to which it is used in the production of income and from a business which is likely to lose value because of wear and tear, obsolescence, and the passage of time. And depreciable assets do not include goodwill, interest in land, a membership interest in an entity, and trading stock. This means that capital allowance shall not be granted on the cost incurred in acquiring goodwill and interest in land. So, by capital allowance, what we are going to do is that we are going to look at your statement of financial position, or maybe what they call the balance sheet of the company, and all the assets that are on the balance sheet or statement of financial position are going to be grouped into 5 classes. We have classes, what we call 5 classes. We're going to put them in 5 classes, and each class have their own rate. So we calculate and give you capital allowance instead of depreciation. So that is what capital allowance is all about. It is always granted on depreciable assets. Don't forget that capital allowance is always an expense or allowance that is granted on depreciable assets that are used in generating income. So if the asset is not depreciable, you cannot claim capital allowance on it. So like goodwill, land, and that thing, no, you cannot get a capital allowance on that one. So that is the capital allowance that we are going to look at. Now, there are rules for calculating capital allowance. Before capital allowance will be granted, there are some rules that you need to understand. One is that capital allowance is granted on depreciable asset. That's number one condition. So these are conditions or rules for granting capital allowance. Before capital allowance will be granted to you, then the capital allowance or that assets must be depreciable assets. That's number one. Number two, the depreciable assets must be owned by the person who is claiming for it. So you cannot use your brother's car, or you cannot use somebody's assets in your business and go and use it to claim capital allowance. No. Capital allowance must be in your name. I said the assets, the depreciable assets must be in your name before you can claim capital allowance on. But if the asset is you don't hold title to the asset, then you cannot be granted capital allowance on it. So that's point number 2. First one is depreciable assets granted on depreciable assets. Capital allowance is granted on depreciable assets. Then 2, the depreciable asset must be owned by the person claiming for it. Then the depreciable assets must be used in carry on the business of the person during the relevant period. So if you have an asset and that asset was parked in the company, let's assume that you have a motor vehicle. That motor vehicle is, let's say you name whatever, but beginning of the year, something broke or the car spoiled, and you didn't face, so you have packed it the whole year. That car didn't serve in anything in the company, no for distribution. In that case, the law is that you cannot be granted capital allowance. So capital allowance cannot be granted on assets that are not used in making the product or making generating income. But if the assets, maybe the car was parked at the beginning of the year, then you have a car in your premises. Then when you come for capital allowance, you are listing your assets. Then you list that motor vehicle as your assets. Your own car is in your name. You will not be granted because the rule is that capital allowance is granted on assets that are used in generating the income. So if you have the assets and you didn't use it, it's just there, then you cannot get capital allowance for such an asset. Now the depreciable assets must be owned and at the end of the base period or the person ending within the year of assessment. So what we are saying is that the depreciable assets must be owned by the person at the end of the accounting period. There are some people at the beginning of the year, they have an asset which they are registered in their name. Oh, this car belongs to me or this property. By January, February, March, April, or maybe in July, then they sell that property because sorry, today they my network. The network is worrying me small. So I am back. I hope you're also there.
Yes, sir.
Uh-huh. So what I was saying is that the capital allowance, sometimes somebody may have the assets. We are still talking about this point that the depreciable assets must be owned by the person at the end of the base period. Now that some people may have the assets at the beginning of the year, but it will not go to the end of the year. So January, February, up to maybe June or July, August, you were having the car, yes. It's new. But maybe in August you sell the asset. You cannot claim capital allowance on it. So the capital allowance are given on the assets that were used from the beginning to the end so that we can grant capital allowance. Because the capital allowance is like deductions that we are going to give to you to reduce your assessable income so as you pay some small tax. Capital allowance granted in respect of a particular year of assessment shall not be deferred by a person entitled to the capital allowance. So capital allowance is not deferred. You can't defer. So if this year you have access to another thing that you qualify for capital and you did not go, you don't apply for it. You can't say that next year you can't refer that, "Oh, last year I was having I was due for capital allowance was so much on my asset. I didn't apply, I didn't come for, so this year add the last year capital allowance." No, you don't do that. Capital allowance is not deferred. That's one condition. Good. Oh. Now let's look at what we call pooling system. Pool system. When I talk of pooling system in capital, I'm not talking of swimming pool. But I know some people when they hear pooling system, so me, I know how to swim. I use my I gift, so after swimming the pool there, yeah, I do. It is average too. So that is not the pool I'm talking about. The pooling system in cap. Or am I lying? Then you know how to swim.
No sir.
Yes, sir.
You don't know how to swim in a pool. So there's what we call pooling system in capital allowance calculation. How does this pooling system work? Now, the pooling system means that depreciable assets that are of the same class, like class 1, class 2, class 3 assets, they are pooled. We are pooling together. So description of the pool system. Depreciable assets of the same class are put together for the purpose of capital allowance. The identity of the assets is lost the moment it is placed in a pool. Assets are placed in their respective pools. So when we come to calculate the capital allowance, sometimes we will use the pool system to classify the asset. So that is the pool system. We will apply it where. So the pooling is that we have class 1, class 2, class 3 assets. They are pooled. They are put in a one separate column. So we are going to pool them. And remember that pooling affects only class 1, class 2, class 3 assets. Class 4 and 5, we don't use the pool system for them. Class 4 is and 5, they don't use pooling. We use straight line. So the pooling system means that when the assets are placed in the pool, they lose their identity. So for example, you will see that they have a plant and machinery, they have motor vehicle, they have this, all the assets, but some they will give you the date that they purchased them and the rest. But once they are placed in the pool, we don't need the individual items. So for example, you can let me do this one. For example, we may have assets like, let's say, computers. Company have computer. Let's say they bought it 10,000. They have something like printer. They bought it 3,000. They have, let's say they have something like a scanner. They bought 8,000. Now, these are assets with their values. These assets, they are all class 1 assets. Now, once they are class 1 asset, assuming that class 1 assets. So, once we want to place them in the pool, we are going to add 10,000 plus 3,000 plus 8,000. Then we say class 1 pool, the balance is maybe 80,000. We don't write the individual names and the date at which it was purchased in the pool system. All you need to do is that all the assets, we want one value for them. So assets of the same class are pooled together. And that is what we call the pooling system. But it is only class 1, class 2, class 3 assets that are pooled. Class 4 and 5, if we have 2 class 4 items, don't add them together. Treat everybody equal, separate. So that's as we go forward, you understand. So that's that. Then Class 1. Now, this is where the problem in capital allowance is a very simple concept, but the problem that students normally face is your ability to classify the assets into good classes. Sometimes you don't take care, you place an asset that is in class 2 in class 1, or you place class 1 assets in class 2, then you are going to have problem. So your ability to learn the classes and know what assets are under each class, so that whenever you finish and you total them together, you can get a total amount that belongs to the class. So let's take the classes and see. So for class 1 assets, so the capital allowance, normal exams, that's why you list the assets and mix them. So you are going to classify them with this class 1 asset, this class 2, this class 3, this class 4. Once you're able to do that, you don't have problem. You are gone. Now exams normally after the exam regular here, you see that the class will be divided. Oh, this one is class 2 assets. Someone say no, this one class 3, this is class 2. And they are just arguing because somebody by you. Sometimes you didn't even take it to class 2 or class 3 that they are talking about. You see, everybody is talking about it was class 2, it was but they be called class 5 and not class 1. Now a D you can't talk about. So classification of the assets you need to learn it. So class 1 asset, what are they? All computers and data handling equipment together with their peripherals are class 1 assets. So it doesn't matter when you see a company having computer, scanner, they bought photocopier, they bought TV, television, anything that is data capturing equipment, anything for data capturing equipment, data, whatever, or maybe computer, anything related to it is class 1 asset. Class 1. Then let's look at class 2 assets. Class 2 automobiles, buses and mini buses, goods vehicle, construction equipment, heavy general purpose or specialized trucks, trailers and trailer mounted containers, plant and machinery used in manufacturing. So you see, whenever you see plant and machinery used in manufacturing, it is class 2 asset. But if it's plant and machinery without using manufacturing company or just that's any office, it's class 3. So you have to be very careful with plant and machinery. Plant and machinery used in manufacturing is class 2 assets. But if it is plant and machinery and they don't see that it is used in manufacturing company, then that asset is class 3, or you classify it as class 3 assets. So we have assets resulting from expenses incurred by a person in production of income of that person in respect of plantation or planting vegetation from which timber, rubber, oil, palm, and other crops are derived. So here there can be expenditure that will be quantified, classified as an asset. If somebody want to do any plantation, cocoa farm, or maybe oil palm, or timber, all expenses that you incur in clearing the land and other thing, the law allow you to treat it as if you are buying an asset in class 2. So they can have expense. So sometimes you may not see an asset, but you see something like they incur an expense of 10,000 for clearing the land for plantation of cocoa or maybe rubber. When you see that one, that asset is class 4. No, that asset is class 2 asset. It's an expense, but we are going to capitalize it as an asset. So that is one thing that you have to also take note. Then we have class 3 assets. Class 3 assets, still on the pooling system. So we have railroad cars, locomotives, and equipment, vessels, buses, tax and similar water transportation equipment, aircraft, specialized purpose utility plant, equipment and machinery. See, plant and machinery used in manufacturing is class 2. But we have another plant and machinery. This one is not used in manufacturing. That one is class 3. Office furniture, fixtures, and equipment. Any depreciable asset not included in another class is class 3. So class 3 assets, there are many. Okay. Then class 4. Class 4 assets, we have buildings, structures, and similar work of permanent nature. They are all class 5, no class 4 assets. So for class 4 assets, they are normally buildings and structures of permanent nature, like the MPM Max, the tall one, the giant billboard that you see. They are all structures, but they are permanent nature. So those things are also class 4 assets. But class 4 does not, full system does not apply on class 4. So it means that if you have 2 class 4 assets, if you have 3 class 4 assets, you cannot add them together to get one figure. You have to treat everybody separate. So you have class 4A, class 4B, and class 4C if you have 3 assets in class 4. So that's then we have class 5 assets. They are intangible assets. Class 5 is what? Intangible assets. All intangible assets belong to class 5 assets. So at this point, if you have questions or comments, you can ask before I move on. Yes, if you have questions up to this point, you can ask. In the absence of questions, then we continue.
Doc, respectfully, how will you distinguish between equipment and machinery under class 2 and then those of class 3?
How will you do it?
How will you distinguish between equipment and machinery under class 3 and those in class 2?
Oh, okay. Now, the equipment and machinery in class 2, the one that will go to class 2, that I had is one that is used in manufacturing. So if you see equipment in the question, there's equipment 300, but it didn't say that it is used in manufacturing, then we are talking about take it to class 3. You only take equipment and machinery to class 2 only when they tell that the company is a manufacturing company. Yeah, okay.
Yes, Doc.
If the company is not a manufacturing company, then equipment is class 3. So now that we have, let's move further. There is a rate of depreciation for each of the class. So class 1 assets, they are 40%. Class 2, we have 30%. Class 3, 20%. And class 4, 10% straight line. And class 5 is 1 divided by the useful life. And I might say that these percentages are not given. So you are going to remember all of that. In exams, the question will come. A company had the following assets, you list the assets and calculate the after allowance the company will get based on the assets. So you are now going to create them. Oh, class 1, class 2, class 3, class 4. And now even class 5. So you are going to create the assets into their respective classes. Good. So take note of the rate. Take note of the rate. Now, how do we calculate capital allowance? How to calculate capital allowance? Capital allowance is calculated by the formula A times B times C all over 365. Where A is the depreciation base, that's base, the pool balance. When you put the assets into the pool, the balance you get, that is what the A represents. So A is the depreciable base or base of the at the end of the base period. So when you have, if it's class 1 or class 2 asset, all the total value of class 1 assets become the A. Then the B is the depreciation rate. Each class has their own rate. So if it's class 1, class 2, you need to show it. And the C is the number of days the asset spent in the base period. So sometimes the number of days, it's not number of months, days that the asset spent. So when we are solving questions, we have to take into consideration that it is the number of days the asset spent, not number of what? Months. So a very simple formula, A times B times C over 3. So C, capital allowance equal to the capital allowance that. So this how the formula is, the A times B times. So the formula you see here as A times B times C. All you are trying, this is the expanded form. So capital allowance, to calculate capital allowance, pool value, which you know very soon, pool value times the depreciation rate of that pool times the number of days in the base period. That is how we are going to calculate capital allowance. Now, there are other things I want to bring in, but before that, I think where we are going, I want to pause here. Actually, for today, I know why I'm doing that, because there's certain thing I have to explain for you to get the concept very well. So we have points to note. This one, let me talk about these points to note briefly. There we go. Now you can calculate capital allowance. This is the formula. Capital equal to pool value times depreciation rate times the number of days in the base period over 365 days. Now let's talk briefly about this one. Point to note. When you are
Doctor is gone again. Oh. Hello, colleagues. Are you there?
He will surely come back. He will surely
Yeah,
come back.
Yeah, he will come. Okay, he's in already. My dad sorry 5 times.
Hallelujah, Hannah.
Erasmus was my dad. Sir.
one other side.
Mr. Erasmus, Obreo. Yeah, bre.
Now, do you know something? I want to. In fact, can you hear me? I hope you can hear me.
Yes,
Yes, sir.
we can hear you.
from the way things are going, I want to end here. I want to end here so that in the next week when we meet, we are left. We do a lot of we do the calculation. Because where we are going, the points to know commercial vehicle and that thing. Because we have to look at the commercial vehicle, look at the point to note, and do some calculation on the capital allowance and prepare the capital allowance. So I think let me see. There are some questions I have to give you for you to try your hands on. So I'll give you a question. Let me give you the question on the this thing. Capital no on primary income for you to solve. Yeah, I'm going to give you a question for you to try. But next week when we come, we will be doing these questions. That's the capital allowance. So this is illustration for capital allowance. So I have question here that we are going to start. Next week we will solve 2 questions on capital allowance, and that will be enough. So this is how you're going to see the capital allowance. But the principles we are going through, we'll go through and solve the question, and you will be okay. So let me end the teaching here because I'm getting to the saturation point. If I build on it too much, I'll end up messing up. So let's end it here for today. So I can go over whatever we have done, and I'm going to give you, as soon as I finish, I will screenshot. I have a question in the book here. I will just send it to you on your platform for you to just, let me see if I can get, yeah, I think I have a question here. Just hold on, but if I don't give it to you right now, I may forget. So let me, I have assignment.
And the solution to the one we solved.
The one we solved. That one I'll give it. Now I'll give that one to you. But the one I'm coming to do right now, that one, I want you to go and try it. So that when you finish, I'll give you the solution. When you finish, then I'll give you the solution. Let me see this. And give some income. Some primary income. Okay.
So give us the solution to guide us.
Which one?
The one we did today.
Which one should I give the solution?
The one
that
we
one
treated
I'm
today.
I'm going to give it to you. That one I'll give it to you.
Okay.
Oh, that one there, I told you I'm going to give it to you. Well, for solution.
Thank you.
I'll give it to you. I'm trying to see. I'm trying to look for one question, another question for you as an assignment, which you are going to try and do it. So let me send it. Okay, let me send the solution of this one to you right now. In a solution, the more solution. Do you still need the solution?
We need it badly.
I found the badly account.
Yes, to be used as a point of reference.
Look at how she has added badly to it. You need it badly. Me, my twin boy say solution. Oh, he had it badly. Sir. Okay, where is it? Where is that solution? Okay. I've got an assignment for you. This is the assignment. Taxation. Group assignment. Wait, I gave it to people as group assignment. Okay, but I'll give it to you as individual assignment. This one. Race. Let me see. Race allowance. Leave medical is similar to what we did, but duty post, 2-way servants, garden boy, security watchman, was whatever. Okay. She's entitled to complete card. Okay. Good. Good. So let me send this one to you. I'm giving you. Is that how many are you? Now you can put you are dispersed. So it's not a group assignment. That's I gave to the regular people as group assignment, but I'm giving to you as individual. So you will see it to be group assignment. It is individual for you. You should have it by now.
Yes, sir. It has come.
That's coming. So
Yes, sir.
there
We are waiting
will
for
be
the
something
solution.
new that
We are waiting for the previous
For the
solution.
solution.
as a solution there you need it badly, Papa. Hey,
Mama no kwa kope.
I'm okay. I mean, that's a solution, madam. Me solution, am I any? My two of us say, I can always have one badly. So you need it badly. And they were in Fama when you shake. I'm in one. Yeah, madam. So go and try that question and let's see. Go and try that question and let's see something. So the solution has come.
That's not gotten to
It has
me. I'm waiting.
Oh, it has
Because of
come.
maybe because of network.
Not yet.
Not yet.
So
Will
nobody
come.
has. Oh, it has taken.
So far.
I've sent it. The question in there,
So far,
I'm
as
going
well.
to Abba.
I drop it.
Yeah.
Hey.
Solution has dropped.
Okay. Now, somebody should read this question. Read before we go. The one I sent to you. Let's read it. Yeah, the assignment. Individual one. Go. Somebody should read through for us. Read it. Alex.
Mildred was appointed. Doc, can you hear me?
I can hear you. Go ahead.
Mildred was appointed on a salary of 4,500 by 1,000 Ghana cedis to 4,503. Hey, sorry. Was appointed a salary of 4,500,000 Ghana cedis by 1,000 Ghana cedis to 4,503,000 per annum with effect from 1st September 2015 as the managing director of Express Corporation. She was provided with the following as part of her condition of service. 1. Risk allowance of 15% on basic salary. 2. Leave allowance of 667,500 per annum Ghana cedis.
You can leave the figures and just mention the items. That want to do the items.
Okay. Medical allowance.
Mm-hmm.
Per annum. Meal allowance per month. Entertainment allowance a year.
So you see that here, the entertainment, there's no accountable to it. So it means that it's part of the cash allowance.
Duty post allowance per quarter. Yes. 2 maid servants, each on a wage.
Sir.
Yes.
Sir, please, the duty post allowance per quarter, are you going to divide it by 4?
No, you multiply by 4, rather. How many quarters do you have in a year?
4.
3, 8, 4.
You okay?
Adwena
I need to sleep. You need to sleep. I could give you. Me, I'm tired.
Garden boy allowance per quarter. Security or watchman allowance per annum. Mildred was provided with a well-furnished accommodation. The building is the property of the company.
This statement changes and have a lot of implication. That statement, the building is the property of the company. That alone change the dynamics of a whole lot of things. So be careful with that. That single statement has a lot of implication on your working. I hope you know that. Okay.
Sir,
Yes.
please, that place, the building is the property of the company. Can you please explain that one, please?
At this point, were you not here last week when we said that how the building belonged to the company, the watchman and the garden boy, they are seen as working for the company, but not the employee who is staying in the house. And therefore, any allowance paid to them will not be chargeable to the employee, but rather they are seen as beautification and providing security to the property for the company. Are you forgetting that? So go and
Yes, sir.
apply it and continue.
12. She's entitled to a company car, driver, and fuel for both private and official use. Mildred has a good relationship with her customers. And as a result of that, one customer called Mr. Eric Budu presented land valued at 65,000 Ghana cedis to her as a gift. The maid servant, garden boy, and a watchman work for Mildred at her residence. She has a husband and 5 children. 4 of the children are in senior high school in Accra, and she caters for the children's education. She contributes 5.5% of her salary to the mandatory pension scheme. During the year, she informed her employer about a severe injury her father sustained when working in his garden farm. Being a very hardworking staff, her employer donated 45,000 Ghana cedis to Mildred to enable her to take care of the father. Required. Compute tax liability for the 2019 year of assessment.
So that is your task for the week. Next week, when we come, I'll take my answers. So go and do that one. So until we meet next week, let's have a wonderful night and meet next week.
Thank you, sir. We are grateful too. Thank you, sir.
I'll give you too for your time. It's not easy, but ever.
Refa.
Online taxation. I have been trying. It's not easy. This one is supposed to be calculation pure, but at least we are trying. Everything will fine. Okay, so next week we will meet.
Thank you, sir.
You're welcome. Bye.
Bye.
Mercy, are you there?
Metron, Ntina Menkono.
Ma Letitia.
Yes.
Assignment been a for a financial reporting.
Financial reporting.
But
Main send him out.
me pa trying. What Roma?
Okay.
Mercy, what na?
Mato nko sa o. Saa baby a na busa question kra mato nko sa. Oh. I didn't style be after the my bread me tonko sa. Because me be mo na yen ko yenim.
Eh dear. Magic is using as an asoko. Also, what down?
That's say wada. Mercy. That's say wada.
Boy, yeah, boy. In the man, but I know I said, no, why.
Me send sisi ansa makoda. Okay. Yo.
Bye.
My.
So, Auntie Matey.